A fool with a plan can always beat a master without a plan. That is why it is very essential for one to always have a plan when you are trying to do something, whatever you are doing, right? You always need to have it planned out. You always need to have the steps laid out so that you know exactly what you want to achieve, what you want to do, right? So the same applies when it comes to your trading journey. So that is why we brought this video to you today, so that we can break down some of the steps that you need to take when it comes to creating a profitable trading plan that will help you in creating some consistency in your trading and also just becoming a profitable trader in general. So without wasting much of your time, let's get straight into it. Welcome back to Day and Night Forex YouTube channel, and on this channel we share different videos that have to do with trading and general knowledge in doing business online, different ways to make money online. So if you're interested in such content, make sure that you turn on the notifications, subscribe to the channel so that you don't miss out on the next video. So if you have visited our website recently, you might have seen that we have some new blogs that we have shared over here. Quite a lot of blogs that we've been sharing over here that you can go through and learn some new skills, some foundation, video foundation in Forex if you're just starting out, or if you're already trading and you know how it goes and everything. You've been going through our videos, you know how we trade and what is our approach to our trading. You can also learn some few things from over here because remember, the more you learn, the more you earn, right? So it's always a good thing for you to keep learning. That is why we are bringing this free educational content that we have here on our website. So make sure you come through and check out some of these posts, right? So it's under educational posts, or if you just go directly to dayandnightforex.co.za, you will be able to see all the blog posts over here, right? So you can also click the button over here to view the rest of the blogs so that you can read through some of these interesting topics that we have over here, right? So as we said in this video, we are covering this one over here, which we already covered over here. So you can come through and read more of that on this blog over here, right? So in this video, we're gonna keep it short. So we're gonna summarize what we shared in this blog post over here. So if you want in-depth details on how to create a profitable plan, make sure that you come through and check this out over here, right? So you can see all other topics that we have here, like the top 5 Forex books that we think you should be reading in 2022. We also shared the 5 most influential companies under the Nasdaq, which will help you to master trading Nasdaq. As you know, we trade only Nasdaq here at Day and Night Forex, and that is the pair that we have mastered, right? We also shared what is Forex for beginners. If you're a complete beginner, we spoke about Forex patterns that you need to follow, what are candlesticks, and so forth, right? So recently we also shared the trading psychology. So remember, trading is basically 10% knowing how to trade, you know, the ins and outs of trading, how to enter your trades, stop loss, analyze the markets. But essentially the 80-90% of that is all based on your psychology, right? It's all about psychology. It's all about your trading approach, right? How you handle your fears, how you handle your greed in the markets, you know, how you apply yourself to the markets, right? So that is very, very essential when it comes to creating a proper trading psychology for a profitable trader, right? So with that being said, let's go and talk about how to create a profitable trading plan. Like we said, a fool with a plan can always beat a master without a plan, right? That is something that you need to keep in mind. So you always need to have a plan when it comes to your approach, when you're approaching your trading on a daily basis. So what exactly is a trading plan? Now, most Forex traders in this industry, they underestimate the power of having a successful trading plan in order for you to create consistency or actually start seeing results in your trading. Now, we actually see this through with our students. We see those who have a trading plan that they're following religiously and basically looking at the same thing over and over again. They are creating more consistency and they're actually getting better results than those who do not have a trading plan, right? Who do not follow a trading plan. They just go open the charts and then whatever they see, that is what they trade. But when you have a trading plan, you actually have laid out the rules, right? Your trading rules. So you need to see certain things on the markets, on the charts before you actually enter the trade. So you basically have a rule to enter the trade. You have a rule to exit if you are losing, if the market goes against you, and so forth, right? So there's a lot of things that goes into your trading plan, and this is why it is very key to have a trading plan, so that when you open the trades, when you open the charts, you know exactly what you're looking for, and you know when to be exiting the trade or when to be entering the trade. You know the patterns that you're looking for, right? What triggers your trade entry and what triggers your exit points, right? So some of the things that you need to consider when you're creating your trading plan are these that we've listed over here, right? So starting with your why, right? Your why is your biggest motivations when it comes to doing whatever it is that you're doing, right? So even in trading, your why is your biggest motivation, right? So the reasons why you're trading, which is your why, why, right? So what hurts you the most, right? So this is something that is giving you the motivation to keep going in your trading, even when you hit those bad days in trading. You can either have a winning streak or you can have a losing streak in a week or in a month, right? So it's always about the reasons that got you started that will keep you motivated to keep going even when you hit those bad days, right? So it is very important to start to actually sit down, analyze what is the reason behind your trading, why you decided to get into trading, right? So it's very important that you start over there. And then we have, second on our list, we have trading goals, right? You need to set your trading goals, whether it's a daily goal, it's a weekly goal, it's a monthly goal, but you need to know exactly how much you want to make before you even enter the markets, right? You need to know what you are willing to put on the table, what you're willing to get out for that amount that you've risked, right? So remember, the more you risk in the markets, the more you win, right? The more you make, right? But at the same time, the more you risk without a plan, the more you could easily blow your account in a day, in an hour. You could lose and get out of the markets just like that, right? So you also need, this is why it is very essential to have a trading plan. So third on our list over here, we have how much you're willing to risk, right? So as we said, before you even open a trade, you need to know exactly how much you want to put down on the table, right? How much are you willing to lose when it comes to your trading, right? So remember, in this game, it's not guaranteed that you make money when you enter the trade. So you need to know exactly how much you're willing to lose. And by willing to lose, is money that you are actually willing to lose, right? So because the market can go either way, you can either go in your direction or it can go against you and you will lose that money. So putting money that you're willing to lose will basically take out the fear and greed out of the markets, just like we shared recently in our blog on psychology. So you need to go through, check out that blog as well, right? So and understand about greed and fear and how to overcome it, right? So the next thing that you need to consider when you're creating a trading plan is how much you're funding your account with, right? What is your capital that you're putting in your account, right? So this all determines the lot sizes that you're going to be taking, how much you're risking per trade, right? So because remember, a professional traders, they risk anywhere from 1% to 3% maximum per trade, right? So that means if you have funded your account with $100, you're not gonna risk $10, $20 on your trade, right? Because if you have a losing streak of 5 trades in a row, that means your account is gone just like that, right? So it's all about determining how much you are funding your account with and how much you're going to risk per trade based on the capital that you have funded your account with, right? So this is very, very a crucial step in determining how long you are going to stay in this game and if you're going to create consistency or you're just going to be another gambler. Because the more you risk, for example, if you risked 2% on your trade versus someone who have risked 10% on your trade, when you lose that trade, if both traders lose that trade, the one who risked 2% would not have that much fear or greed in the market saying I need to make this back or I need to replace my profits, I need to make more, right? So that is when the greed will kick in. Someone who has risked that 10% and lost that 10%, now they are scared of losing more, right? Because they're already 10% down on their account, so they are now full of greed. They're now fear of losing in the market, so they are now being controlled by emotions, right? They want to replace that money, they want to make profits quick and replace the money that they've lost, right? So this is why it is very, very crucial to understand the capital that you're starting with so that you can have a proper risk management approach using that capital that fits or that suits your trading account size. Now remember, with the capital, as we have said in our previous videos, the more money that you have, the bigger the account, the better your trading will be. Because if you're risking 1% on a $10 account, that means you are risking about 10 cents. Compared to somebody with $100 account, they're risking $1, and then obviously your returns, your expectations also have to suit the amount of money that you're risking, right? So if you're risking 10 cents because you have a $10 and you want to follow proper risk management, you cannot expect to make $10 per trade that you are opening, right? You cannot expect to double your account if you're following proper risk management. That is why it is always better to have a big account. If you have $100, for example, that means if you're risking that $1, you can expect to make at least $2-3 with a risk reward of 1:2, 1:3 based on your trading strategy, right? So risk to reward also plays a very big role when it comes to creating consistency, and that is something that you need to consider when creating your trading plan as well. Now, next on our list, we have what markets do you want to trade. Remember, when you're starting out as a trader, you don't have to focus on every single market or every currency pair that you see on the market. You have to choose 1 to 2 or maximum of 3 that you're going to be following religiously to understand what makes them move, the fundamentals, how how they react to those fundamentals, how the markets move after fundamentals, whether they follow the fundamentals, they go against the fundamentals, what chart patterns do they follow, do they respect the support and resistance levels, do they respect the WM formations, all those different things. So if you have plenty of pairs that you're following, that means you're going to have confusion, right? You don't know when this pair actually moves. It's always better to focus down on 2-3 pairs that okay, if this happens, I can expect this such move, and I can expect that this amount of pips to move in this direction when I get this type of pattern on this chart, right? So this is why we advise to always look at 2 to 3 pairs maximum when you're just starting out. Even if you become a professional forex trader, we only trade on Nasdaq. We only trade Nasdaq and US30 as well, because they are pairs that correlate, right? So most of the time they're in correlation, so which also helps us to confirm our trade setups, because if we know that US30 is going up, then Nasdaq should be going up as well, right? So you can also work with pairs that are inversely correlated, right? So meaning if maybe USD/JPY is buying, then anything with a USD at the end, maybe GBP USD should be selling, right? Should be going opposite direction. That is another thing that you need to keep in mind when you're trading, when you're choosing the pairs to trade, right? So you can either have pairs that are in correlation so that you can use those as part of your confluence, right? So as part of your confirmations, right? So when you see the same setup on both pairs, if they're directly correlated or if they're inversely correlated, you should be seeing the opposite for those two pairs over there, right? So now next on our list, we are going to talk about the strategy that you'll be using. Now, if you come to our channel, on the homepage, there is a video that we shared that we spoke about the scalping strategy that we use here at Day and Night Forex. So if you're interested in learning a new strategy, if you're interested in learning how we trade here at Day and Night Forex, you can go and check out that video. It will explain exactly from zero to hero how we trade and how we approach the market, right? So you need to keep in mind your trading strategy. You need to have back tested this strategy and you have confidence that it actually works out more than it doesn't, right? So you just need a strategy that will win at least, with a good risk to reward ratio. You can lose 50% of your trades but still be in profits after losing those 50% of trades, right? Or even 40-30% wins and 70% losses, but because you have a good risk to reward ratio, you can still be in profits after those trades over there, right? And next in line here, we have the approach that you're going to be taking in the forex markets, right? So you need to analyze yourself and understand whether you're a scalper or you're a swinger, right? So if you're a scalper, that means you have more time to spend on the charts, not necessarily saying that you're going to be sitting behind your computer 24/7 analyzing the markets, right? No, that's a formula to failure, right? So if you're a swing trader, that means maybe you have a day job or you have a business to run throughout the day, and you only maybe enter your trades on a Monday, and then that is it for the week, or that is it for the whole day, or for the next 2-3 days, right? So you enter less in the markets, but you hold your trades for a long time than scalpers, right? So when you're scalping, you could be in and out of the market within an hour, right? Within an hour, within 2 hours, or some will even go down to the M1 1 minute chart and they trade, just like that, like 5-10 minutes, they're in and out of the markets. They just catch those quick scalps. So it all depends on your approach, on your patience, the time that you have, and how, like as we say with our following point here, your free time that you're available at during the day, every day, right? So the amount of free time that you have during the day will determine whether you're a scalper or a swinger, and also just your patience in the markets, right? Are you able to hold the trade and see it play, go down into drawdown and then back into profits, again into drawdown, back into profits, until it actually hits either your stop loss or you take profit, right? So that is something that you need to analyze yourself before you consider whether you're going to be taking the scalping approach or the swinging approach to the trading, right? So next on our list, we have how badly do you want financial freedom, right? So you need to want financial freedom for you. It must be in you, right? The zeal must be in you. It's not something that people should force on you. It's something that that driving force should be found within you, right? So that fire must be found within you. It's not something that is forced by external sources, but it's something that is in you. So how badly you want financial freedom, that motivation, remember, it resonates with the first reason that with the first point that we mentioned here, which is your why, right? What is forcing you? What is driving you towards that financial freedom? So you need to keep this in front of you, whether it's making that visual board that you have all your goals and everything on there, so that you keep yourself motivated and driving and always reminding yourself why you started when you're facing those bad days, or you're feeling down, you're feeling unmotivated, and also just coming through to watch other people's videos here, like what you're doing here on YouTube, to keep you motivated, to tell you to actually give you the truth about this financial markets, right? So there's so many people out there selling you dreams when it comes to the forex markets, like you can do this in a month, in a two, but it takes time, right? It's something that takes time to build. And here at Day Night Forex, remember, anyone can teach you forex, but here at Day Night we teach you how to win in the markets, right? So you need to have patience. Patience is very, very key when it comes to your trading journey, right? So next on our list here, we have how do you deal with your wins and losses. Now, this is very key because you never want to get your wins into your mind, right? You never want to feel like you're God when it comes to these trading markets, because the markets will humble you guys, okay? The markets will humble you if you think you are a king, you know it all and everything, right? You need to keep learning every single time. Whether you have a winning streak throughout the week, still go back to the charts, back test during the week and see what you did right. We'll see what you could have done better to get even a better risk to reward ratio on your wins that you had, right? So there's always some room for improvement. There's always some room to improve your trading approach. So always make sure that you're back testing even if you have a lot of wins. So never let your wins get into your head so much that you think that you are the boss of the markets, right? Shows like you control the markets or anything. But on the flip side, also don't let the losses get into your head as well, right? So if you have a bad week, you have losses after losses after losses, doesn't mean that you're a bad trader. Maybe it's just a bad week due to fundamentals, or maybe you're trading during the NFP week and so forth, right? So a lot of things can manipulate your trading strategy and make you feel like you have a losing strategy. Most of the time that is not the case. It just may be due to whatever is happening with that in the market situations. So this is something that you can always count out by back testing once again and seeing what happened with that week and improving upon your trading strategy, right? So last but not least, there's a quote that says you cannot improve what you cannot track, right? So if you can't track it, you cannot improve it. That is why we seriously encourage you to keep a journal of every single trade that you take, right? So if you're a professional trader, you should be knowing exactly the reasons why you take a trade, why you took a trade. This is why we recommend that you keep a journal. Now, in this journal, you're going to be listing exactly each trade that you take, what the reasons why you took the trade, what was your stop loss, what was your take profit, and how many pips did it move? Were there any fundamentals that were involved in you making that trading decisions? All these things that you went through before you taking that trade, before you took that trade, and also how you managed the trade during when it was still running, right? Before you hit your stop loss, before you hit your take profit, how were you managing the trade? The more details that you have to put in on your journal for each trade, the more it will be easier for you to improve when you look back into your trading journey and see all the steps that you've been taking and which ones led to success, which ones led to bad trades and so forth, right? So keeping a journal is very, very essential, guys. It's very, very key for your trading plan, right? So that's basically all the steps that we had to share with you when it comes to trading. And as we said, the full blog over here, as you can see, this is just a bit that we'll be sharing with you. If you want to read more on creating a profitable plan, you can come through to Day and Night Forex and then look for this post over here, how to create your profitable trading plan, right? So if it's not showing over here, you just click on view all posts and then you'll be able to find it, right? So that is the post that we've been talking through. And always remember to cut your losses short and ride your wins, right? So most of the traders, they do the opposite of this, and that is why you are not winning as much as you should be, right? So if you enjoyed this video, make sure that you hit that subscribe button down below, set on notifications so that you don't miss out on the next video that we have. And remember, as we said, all these blogs you can come through and find as we are sharing more and more of these blogs here on Day and Night Forex our official website. So the links are going to be down below. You can also leave your comments and thoughts and questions if you got here in the comment section, and I'll get back to you over there, right? So you can also come through and check this quick journal that we actually had over here with a $100 account that we actually doubled within a week, right? So that is another thing that you can come through and look here on the blog that we shared in details, right? So with that being said, thank you very much for watching this video all the way to the end, and we'll be seeing you on the next one.